This video is brought to you by togetherbudget.com. When it comes to diversifying your investments, the goal is to spread risk and increase potential returns. Let's say you have a portfolio of stocks, but you want to add some stability.
I completely agree. I've seen many investors get caught up in one particular asset class without considering other options.
Exactly. A diversified portfolio can include a mix of low-risk investments like bonds, high-growth stocks, real estate investment trusts REITs, and even alternative assets like cryptocurrencies.
That's a great point about REITs. They offer a way to invest in real estate without directly owning physical properties.
And with the rise of fintech, there are now more options than ever for investing in assets that weren't previously accessible to individual investors.
What are some common mistakes people make when trying to diversify their investments?
One mistake is over-diversification, where an investor spreads themselves too thin across too many assets.
I see what you mean. If someone has a small portfolio, adding too many investments can be overwhelming and lead to poor decision-making.
Another mistake is underinvesting in international markets. With globalization, it's essential to have exposure to global economies and asset classes.
And what about fees? I've heard that hidden fees can eat into returns.
To diversify your investments effectively, you need to consider your risk tolerance and financial goals.
That's a great point. It's essential to tailor your investment strategy to your individual circumstances.
For example, if you're close to retirement, you may want to focus on more conservative investments that preserve capital.
And what about tax implications? I've heard that certain types of investments can impact tax liabilities.
So, let's dive into the world of real estate investing. One popular strategy for generating passive income is through rental properties.
That's right. Rental properties can be a great way to earn passive income, but it does require some upfront capital and management time.
One strategy within rental properties is to invest in real estate investment trusts REITs. These allow you to pool your resources with other investors and diversify your portfolio.
Yes, REITs can be a great way to participate in the real estate market without directly managing physical properties. But what about the potential risks?
Another strategy is to invest in real estate crowdfunding platforms. These platforms connect investors with developers and projects, allowing for more accessible entry points into the market.
That's fascinating. And what about the potential tax benefits of investing in real estate? Can you walk us through that?
So, when it comes to creating digital products for recurring revenue streams, you want to think about creating something that solves a problem or meets a need in your audience. What are some common problems or needs you've seen in your own niche?
Well, I've noticed that in the health and wellness space, people are really struggling with meal planning and grocery shopping. They want to eat healthy but don't have the time or know how to plan their meals. What kind of digital products could we create to solve this problem?
Great ideas. Another thing to consider is creating digital products that can be sold on autopilot. What does that mean?
I think it means creating something that once created doesn't require a lot of ongoing maintenance or support. Like, we create the product and then it just sells itself, without us having to do much else.
Exactly. And one final thing to consider is pricing. How do we price our digital products in a way that's fair to both us and our customers?
I think the key is to research what similar products are selling for, and then price ours competitively while still making sure we're making enough profit. We don't want to undervalue ourselves or our expertise.
When it comes to investing in dividend-paying stocks, you want to look for companies with a proven track record of consistently paying dividends. This is where the concept of yield comes into play.
Can you explain what yield means in this context?
When evaluating a potential dividend investment, you should also look at the company's payout ratio. This measures how much of its earnings are being distributed to shareholders.
That makes sense. But what about the importance of a strong dividend history?
One key strategy is to focus on established companies with a history of paying consistent dividends. These are often referred to as dividend aristocrats.
That sounds like a solid approach. What about the role of dividend reinvestment?
When building a mobile app or online business, it's essential to focus on scalability from the very beginning. Otherwise, you'll be stuck with a product that can't grow beyond a certain point.
That makes sense. So what are some key considerations for building scalable products?
Another crucial aspect is data collection and analytics. You need to track user behavior, preferences, and pain points to create a tailored experience.
I see. And how do you recommend integrating data analytics into the product development process?
Automating tasks and processes is also vital for scalability. This includes automating customer support, email marketing, and even payment processing.
That sounds like a huge time saver. But what about the initial investment required to set up automation tools?
This tutorial is brought to you by Malik Abwalzait.